Hello, everybody, and welcome to the Plus3 Futures midweek update. This is going to be a first in a series due to popular demand. We do read your comments and we listen, and everybody thought a midweek update would be a good idea. So this is the first one, and we're going to cover what we think is the timely thing for this week, and that's NVIDIA, who's got major earnings coming out tomorrow after the close. So we're going to do a quick review of NVIDIA and see how it might affect the markets. For those new to the channel, my name's Ben Maldonado, and as always, I'm here with my partner Barrie Hederachi. Barrie, how we doing? It's Tuesday, which we usually don't record, but here we are.
Here we are, and it's a worthwhile cause. So let's just take a look at this.
Yeah, so let's see how the chart shapes up, how the technicals look, and then based on that, we can kind of give you a decent idea of its positive or negative or no effect on the markets. So let's dive right in.
Yeah, let's take a look at see where we are. As usual, I'd rather start with the longer term view. So let's go for the monthly. And this is the monthly chart. And what you're looking at, all the monthly counts. And really, realistically, you only need one or two counts to come in. Yeah, after the split, the old prices really got kind of whacked. But I went in and, found the exact dates and anchored it on the actual lows that happened back in the day. What's interesting is they all kind of lined up. I mean, we have a lot of, good time counts coming up.
Yeah, a lot of good harmonic numbers there.
Yeah, right into this 180 count, which I think is the important one because it's 180 months by 135, which just happens to be that high. Yeah, counts are great. We have 240, 300, 180, 144, 66, 60. 60 on a monthly count is very important. So that's there. We have a 108. So there are plenty of counts. Well, so what? What happens next? Well, what happened was last time we looked at NVIDIA was back in February, and I'll talk about that in a minute. And at the time, price was trading right around a little bit above 75, right in here. So what happened after that count came in, we had roughly, basically we had a 2-month correction. We corrected all the way from the high and all the way down into 91. And that correction roughly covered a 90-degree movement in price. That's kind of easy to see, right, Ben? Last month's high, this month's low. So
it's 45 degrees, right? 45.
I'm sorry, 45 degrees, right?
Yeah.
Or 45. So 45 degrees spread. It caught the entire thing.
That was beautiful. Look, top, you got the high at the top of the square and you caught the low at the bottom of the square.
Right. And due to the, if you look at the scaling and because of the 10-to-1 split, what happens is anywhere in here, you put the square, you still get the same, very close to the 135 degrees in price. You know what I mean? You still get the same high, and you have plenty of choices for, which low do you want to go off of. And I also like this square because you can see prices really worked well especially in counter trends. Like this counter trend was half a square, which would be 22.5 degrees. This was a quarter of a square. This was a half a square, and this was a full square. So, by looking at the counter trends, you can kind of tell if the square is working or not. And it seems like it's working well. So that high came in. And what kind of a, correction would you expect with that kind of a square? Well, at a minimum, 1/3 of the entire move is not bad, and it's very bullish as it goes. Would a 50% move be out of the question? No, not really. Not with a move like that. Right? So so let's keep those things in mind. The main thing that got me was, we should have done this 2 months ago when the high counts came in. but we don't trade stocks that much. It's really the commodity. So, we're not on top of all the stocks. Anyway, so we got the correction down to 90. So let's take a look to see what happens from here. And the reason I wanted to show you this is that we did have a huge monthly cycle expire, and I'll show you the weekly cycles that also expired and how to trade this thing, not just based on the squares, but also using these key price levels that we use. Anything you want to talk about on the monthly for now? Or
No, just that the 45 vibration on the monthly is really good, and the
Mhm.
reaction, and you're seeing that by the reactions it's getting, all along the square, either at the full, the half, or the bottom of the square, that it's causing reactions.
Right, right. All right, let's move on to the weekly, which weekly is sort of my favorite. So
Hmm.
weekly, what happened was from the 2018 low, we're up 270 degrees. And again, if you look at, if you guys watch all of our square work on the weekly show, you know how we treat these key points. And you can see when we came up to the first 90, how we stalled here for almost half a year.
Half a year, yep.
And then we finally did the triangle. And here's the last point of a retest. And then we took off. And where did we stop? We went right up to the next 180, stalled out, pulled back, got on top of that square, and then we went another full square. So you can see, when this thing gets moving, it really doesn't like to take breaks. It just goes. Once
Square
it's
to square.
right, once it
Hmm.
clears the square, it just seems to just really go in the other direction. And you can see that happen at the half square here. We came up, got above it, and as soon as we started moving, it really was. We didn't have any big corrections in between. It just went straight to the top of the square before we start consolidating,
Hmm.
in a meaningful way.
Adding one thing, Barry, on your monthly,
Mhm.
the 180, the 180 months from the '09 low
Mhm.
corresponds exactly to the NQs. Remember the 180 months we had on the
Right,
NQs
right. Mhm.
that called that one high out. So
Mhm.
that
That's
that that cycle is reverberating not only in the indices but through the members of the indice too.
Mhm. Mhm. Let's take a look at what's happening on the weekly. What's happening is we're up 270 degrees from the 2018 low.
Hmm.
That's really important. Now, do you remember what got us, that you had that cycle in NASDAQ, and then we found from the 22 low, we had that 90-week cycle in the
Yep.
S&P. Remember that?
Hmm.
So if we take it to the low
Oh, look at that.
22, right? We have
There's your
a
90 weeks.
90-week cycle. So,
Hmm.
which is pretty good. Now, the question here is, so it was 90 weeks. We went to 7/8 of the square at the high. All right, close enough. And we corrected, entire square. In this case, in the weekly, we squared basically little more than 90 degrees down. So
Hmm.
here we're, 1/3 of the move was retraced. And the question is that enough? Is that it? Now, do we continue higher, or do we trade lower? These are like the questions, you know, we'd like to get answered.
Well, that 125 level of the half square looks pretty damn important.
This one, yeah, this looks really really important. And the 180 seems very important also.
Yeah.
And so let's break this down. Let's take a quick look at it without, taking tremendous amount of time. So this is the weekly. So far, we have an inside bar.
Hmm.
And last week we had a high bar, sold off, and we have an inside bar. So let's keep that in mind. The main thing here is, yeah, we had a few things line up and square up here, but I think the important one would be the 90 weeks that's coming off the low in 22.
Hmm.
All right. And we also looked at those other moves that was 270 up back from the 2018 low. So keep that in mind. So what are we noticing so far? We're noticing all the time cycles that expired at the high.
Hmm.
Okay. Let's go to the calendar day chart, see what's happening. So here, now we have some interesting things because now we're zooming in on the current time zone.
Hmm.
Now, last time we looked at NVIDIA was back in February, and we were looking at this move from the beginning of January going into February, which was 45 calendar days,
Hmm.
and that's a good sort of a blow off move. And from there, what we talked about was, and this is kind of actually a good lesson. We talk about what happens when markets square out. What can we expect, and how do we use price levels to help us get on the right side and stay on the right side? In this case, well, this was before before the split. So prices were a little bit off, but roughly it's, you can just multiply it by 10 and sort of get to the ballpark, right?
Mm-hmm.
And at the time, maybe I should zoom in a bit. Let me. At the time, there were other cycles that came in, but this 45-day run I thought was important. And because it came in just so much like a sort of a blow off kind of a move, right?
Sure.
And the bottom line was a top of a square that I had at the time. And if you guys want to check this, you can go back and look at the video. It was done last February. And this line at around 66 and a quarter, let's say 660, I think at the time, was I think it was a 90-degree line, or it was an important square. So
Mm-hmm.
the was that the square? Hold on, let me think. No, this was the square, 74. All right.
Mm-hmm.
So what happened was when you get up to the line, the idea was if this high really is a sort of blow off 45-day move, we should sell off, come back for some kind of a lower high, and then
Roll
really,
over.
yeah,
Mm-hmm.
and really sell off, maybe 50% or so. Now, what happens if we don't get a lower high? So our rule always is, if we have a square and the square gets taken out, then that just simply means there's a bigger square, bigger cycle pushing, or more than one big cycle pushing upward. So there's another point of termination. It's just not this one. Right, Ben? I mean,
That's exactly right. Yep.
that's the basic rule.
Same concept with the ABCD. When the ABCD target is exceeded, bigger cycle at play, and you get some more run out of it.
Exactly. You can actually trade that,
Mm-hmm.
the last bit of the ABCD.
Yeah.
So what happened here was, I think we were recording on February 20th. It just feels, yeah, I think so. And
Mm-hmm.
the next day, earnings came out, and we went a little bit lower. I mean, maybe the earnings came out the day after that. So anyway, only pullback we got was a gap right through the high. So there was really,
Right.
no lower high to deal with. So our basic rule is, if it gaps through, and I think there was a 90-degree line right here from a different low
Mm-hmm.
at around 74. The idea is, it should come back and recheck and then move. So what happened was we ran up a little bit, acted like we were putting in a low, came back down to recheck that level, right, right around this April 19th low. And from there we took off, and you can see after we cleared this 180 area, it was just, back in the game. All right. So that's what happened from after we looked at the market in February. Just want to clear that up so everybody's on the same page. Now, what's happened now is let's take a look at so that was a February. Now I'm always looking at these big runs. When they go up into a high, I'm always looking at the low to see what kind of move did we, what kind of a move did we get? What did we come out of? Here, we ran up 270 degrees almost, right?
Mm-hmm.
Came up for a lower high and we sold off. And now we're back up pretty much up in the same area. And so let me go to the trading day chart really quick and we'll come back to it, circle around.
Okay.
So trading day chart, we from the 22 low, we're 450 bars out. And if we take it from the low before we took off, back in 23, we're 180 by 180 right in here. Not quite
Nice.
exactly at the high, but it's in the area, right?
Mm-hmm.
Why this area? Well, we had those other monthly and weekly things, cycles coming in about the same time. And then if we go to the low right in April, that right before taking off, and
45.
yeah, we have 45-day run right into that, and 45 by 135. So that's really good. I mean, that's kind of what we want. I mean, this is sort of the ideal ending for a big cycle, doing that 45-day run. And we did it. It had a very nice, here's our famous multi-day counter trend, and we sold off, got back into the support range, and we're kind of in the middle of this next rally. So the question is, with earnings coming, what happens now? We're going to gap up higher and trade higher, or did that 90-week cycle really terminate that for the time being? And if that cycle, since it seems to have, it had some traction, was that enough of a correction to balance that out, right? Balance out that move. I mean, at least these are the questions I'm thinking, thinking of.
Mhm.
Is that enough? Are we going higher? Are we going lower? What happens next? So if we take it from the high, you can see we were down, roughly 90 degrees.
90. Yep.
That held and came. So everything sort of checks out. Everything's looks like okay. It did everything by the book. So if you look at the calendar day,
Wow.
right? Look at that, right? We went down.
180 by 45. Yep.
Mhm. We did 180, and the key thing here is we did 45 down
Hmm.
on that correction, which is also textbook. So I can't say, well, we didn't quite square out, so maybe there's more downside.
And look at where you're sort of banging up against the half square right now. That's
Yes,
important.
yes. And the other important thing is this high, we're going off of after the split. I just feel like, this vibration is always different, after the split
Hmm.
um, happened because it's kind of trading on clean numbers, right? But the square is good. It's looking very nice, especially after we squared. And this is how we should run after proper correction and a proper square. Now, of course, like you said, now it's stuck at the 50% level. What happens now? What can we look for? So we'll come back to that in a minute. Let me go back to the monthly, just to give you guys a reference now, okay? What's happening in the monthly is we have the 45s, looks good. We have a square. Now, is that the only square? No, we also have some 70, 144 squares that are also coming in nicely. So here from the low back in 2018, we're also up 135 degrees exactly,
Hmm.
and square and a half on the other side. Let me switch. I just want to do these other division just to show how compelling this whole thing looks. Now, looking at the 72s, which have worked well, in the stock, if you put, and this is a decent low to go by because this is kind of where everything kind of started. We have two lows we can go by. We can
Hmm.
go on one of these lows, and we have two lows here. So if you put it on this low, which I like, the 2018 low, why? Well, for one thing, we did 36 months right to the, right into the high, and we corrected, so we know the timing is okay. Is that if we go 72 months out, which is a big number in Gann work, back we could be 72 months by 144 up at around 148 in December, right,
Hmm.
Ben?
Yeah.
That's something to keep in mind. Okay, if we take out these levels that I'm going to talk about in a minute, and we continue to move higher, these are the higher levels that we can tag.
Yeah. The
140, yeah.
148. And
Mhm.
and if you do it in December, you'll have that 144 by 72.
That's right. So that's
Mhm.
something to watch. All right. So let's go back to the weekly. Weekly, if we use the 72s and a couple of other squares, we will get to the 270, and that'll be not exactly 147, but it's close enough. We see that
Hmm.
270,
Hmm.
147. So that seems like the target, in the weekly, just going off the low in 22. And the other ones will give close enough of a reading. Not all of them, some of them. Okay. Now, if we get back to the calendar day chart, we have a 50% level going off of this high. So we'll go ahead and use that. Just remember that's marked within this bracket. Okay. Just,
Hmm.
okay. So from that low, 180 comes up to about 135. And if we go another 50% of the next square, we get up to 147. Again, you see how the monthly, weekly, and the daily, they all kind of line up from different places, and they all seem like important levels. Now, the price, we can get there before December, and it'll still click. At least we'll hit the resistance level, and timing we'll have to look for perhaps from another spot. Okay.
So it looks like we got to stay above 125 to open up all those other areas, right?
Not
In the one
only, yeah,
in the
not only,
140s. Hmm.
yeah, not only stay above the 125, and I kind of did a bracket here using some of the other methods. So
Hmm.
it's really about 121 to 132. roughly about a $10 range, right? That's,
Hmm.
this area we can mess around. It really wouldn't signal any kind of a big change. We
Hmm.
can obviously consolidate in here. But I think, like you said, 125, 124 and a half would be definitely should be like a yellow flag if we can't get above it or we get stuck under it. That's
Yeah, if you're bullish, you don't want to see price get stuck under that area.
exactly. Now, and if you're bullish, if we somehow get above 132, then I think it opens it the way up to 150. But
Yeah.
when I say get above, we need to sort of get above and hold above, right?
Hmm.
That's the idea there. 132, if you get above that, we can go higher. And the higher target would be right around 147, 148. And we have some other time counts, but December would be amazing because that would give us that huge square that's happening on the monthly basis.
Hmm.
And we could certainly correct here. And then, let's say we make a low in September, October, and still go back up and, slam up into December and make a high and be done with it. So there's still room, upside room, if we were going to complete that cycle. Now, on the other side, like Ben said, if we get under 124 and a half, and let's say we break below 121, and I think because of the way the cycles are and where we are in the cycle, taking out 121 at this point is going to be negative. And I think that then
Hmm.
we'll see a lot more downside. So to trade the short side, I think, 124 and a half will be the first key. And then we're going to have to look at, how we manage below 121. So that's to the downside. Upside, holding above 124 and a half is definitely positive. But then trading above 132 will open up another block up into 150.
So the key thing in what Barry's saying is, and this is what I hope people take away from this, is you don't have to gamble on the direction before earnings. Wait for the announcement to come out. If it trades above 132, it's bullish. Look for a bullish setup. If it trades below the 125 to 121 area, look for bearish setups.
Right. That's really it.
And
And I
that
think,
way you have an edge instead of just flipping a coin and saying, "Oh, I think the market's gonna go down, so Nvidia's earnings are gonna be bad." You
right.
might as well, go flip a coin.
Right. And in the bigger picture, just to wrap up, what we really want to remember is, we have, I'm getting some bad ticks here, so don't mind the last bar.
Hey, we were just saying, I saw it on my charts too. Is this a premonition of what's coming after the earnings release?
So I just wanted to say, what we saw in the monthly is we have a potential high in place. Why? Because we also have that 90-week cycle that expired and we got a decent reaction off of it. The question is that enough of a reaction? Are we ready to go higher? Well, if we look at the higher side, we have this 144 by 72 that sets up, right under 150.
Hmm.
And it can go all the way up into December, right? So those are the things that's sort of the framework. And if you look at the weekly, that certainly came in on time. And the correction, for me, the corrections, is that enough? Or when is the next setup? And to me, it looks like however it ends up, if we somehow get below this 125, this weekly 50% level, let's say it's 124,
Hmm.
that level, then I think the continuation of the downside is still open and we might not be finished with the downside. So those are the things to keep in like keep in mind, because if we're going higher, we have a target, it's not doubling, it's not, before we get the next sort of a correction. And we already had a correction off of this low. So how much more can we go if we're going to go higher? Otherwise, was this correction sort of not enough? And are we going to go lower into September, October, and then run back up into December to square out? Those are the kind of the patterns that I'm seeing. But to move out of here, this is the bracket that you can use. You can use the brackets that we just talked about.
And Barry, what are the bigger lessons, not specific to NVIDIA, but just the bigger lessons you take from this analysis?
Well, one of the big ones was how we looked at it in February, like we had squares, we had monthly and this and that. And I think the biggest, one of the biggest lessons is if we have strong squares and strong expirations that show up on the chart, if they get taken out swiftly, like here, there was no messing around. The next day, boom, we're above that level. And they hold above, break above, hold above. I mean, you can say break above, and here's the holding above, 2 bars later. and then spent a lot of time up here, had a triangle, false break to the downside, retested the level, the breakout level, at least based on the square, and it took off. So the big lesson is if a square gets taken out, there's another square that's working above. So might as well trade in that direction till we get to the next timing point,
Right.
which just so happens that we're in one now, you know,
Yeah.
looking at the 45s and the 90s and everything that lined up at the high, and also how we ended up here. So yeah,
Yes.
I think that's the key. And
It's
here
that
we're
principle of when a good target or a good timing point is exceeded, you got to go with it because you're going to get a powerful move coming out of that.
exactly. And this is kind of, I think, how Gann came up with this rule about buying new highs and selling new lows.
Hmm.
I used to always wonder, wow, how could you just do that? Well, you do that when the high squares out and it goes out and make a new high. Well, he went long because it just works out majority of the time.
Right. No,
Yeah.
that's great. That's good relating to trading with the GAN. So, hey Barry, let's take a quick before we wrap up. Let's take a quick look at ES and see what's happening there. Give a
All
little
right.
midweek update on that.
Well, ES, if you look at the daily chart, not a whole lot happened in the last 2 days. We're still sort of clustering and coiling below 56.82 on the daily, which is
Mhm.
72 degrees, 270 degrees up from the low in October of 22. And well, we covered all of this in the weekend podcast, you guys, so you guys can check it out. But basically, nothing happened. We had a high bar yesterday. We took out the low of that high bar today. So we want to see how we'll continue to tomorrow. If we take out today's low tomorrow, then we know there's a much bigger move in the works. So that's how I would sum that up.
Mhm.
And if you look at the 30-minute, our famous 30-minute chart,
This is your sleeping pill.
yeah, exactly. And it's amazing how this 56.29 ended up becoming such a,
Oh, it's the magnet. Yeah.
it's just been sort of a skewer, So we're just wrapping around that, and it's a little bit of time below, it's a little bit of time above. Yesterday we got this false break. We talked
Hmm.
about the possibility, on the weekend podcast. So long as we're holding above 56.29, we can, we have to go up and tap 56.75, and that's we have a lot of resistance there. If we somehow take that out, then it's not going to won't be a long wait to get to 57.20, because it'll just all this sideways was coiled up. So if we take this out, we're going to go right to 57.20.
Hmm.
And if we somehow wind it downwards, we broke a little bit today, ran up. Let's say we break this low. Okay, so here's something to take away. If we take out the low on today's low, I think the market's going to get weaker, and we'll definitely see 55.85, or if not
Hmm.
lower. So we got to
Hmm.
watch this low. This is important, low we made today. That's it.
Yeah, and it's basically it's boring. There's nothing to trade, but you got to watch it.
You definitely have to watch it, because this is where big moves come out of these kind of
And
things.
that's exactly right. We're building up energy for a big move, and it's going to come out of here. Is NVIDIA earnings going to be the catalyst? Who knows?
Mhm.
But watch it. You have the levels, just like on NVIDIA, you have the levels here on the ES, you know the levels. We gotta stay above 56.29 if
Mhm.
we're going higher, and then it's 56.75 and then
Yeah.
57.20.
Right.
If we get stuck under, it's 55.85.
Mhm.
And then if that gets lost, you're down to the full square.
Right. And if that gets lost, then we have a month-long downturn. So,
Yeah, then it's a much bigger deal
yeah,
because remember that'll take out that weekly low, and then we've turned down on a weekly.
exactly. So that's a much bigger deal. So, but all that gets started at the 56.29 level, at least far as our work goes. So let's watch that, see what happens.
Excellent. Well, Barry, this is the first one, but I love it. I think it's a great thing we can do, give people updates and bring in new instruments, whether it's, we talked about a couple other things we talked about doing. Maybe next week we'll do uranium or the gold miners
Some of the
or
requests, uh-huh.
yeah, some of the requests that have come in. We'll try and keep them relatively short, but concise and actionable ideas. That's what we'll do. We'll provide you with the levels, and then you know what you can do with them.
And if you guys like our work, please remember to subscribe, like, and share the videos.
Yeah, of course. Please do that. We're trying to grow the channel. You guys have been great helping us grow it, and it's fun to see the numbers go up. So
Yeah.
we appreciate your help and we appreciate your support. And we will talk to you next on the weekend video. Great
Sounds-
job, Barry. Thanks a lot.
Thanks, Ben. Good job. We'll talk to you later.
All right. Bye bye.